I would like to welcome everyone to join this afternoon's Unlock the Property Chain workshop. So just a very quick agenda here. So as you know, we have break this property chain into three sections. The first section is around the planning and business development. The second section is around construction and design. The third section is around professional services. We'll straight when you go into our open discussion.
I think this is kind of interesting topic, but before I start, I think there are two issues that when we think about this topic. One is the location. So how far is the land or the property to that transport infrastructure? The second is the time. When is the best time you buy the land or you buy the property? So I'm going to focus on the time. So if we think about the whole project, that probably got three steps. One is at the very beginning, government made assessment and announced that we are going to build this infrastructure. Then the second part is the whole project is under construction. And the third part is after the construction and the government open it to the public. So if we think about these three steps and take the Epping to Chatswood via Macquarie Park line as an example. So in 2002 and 2003, when government announced that they're going to build a new link between Chatswood and Epping via Macquarie Park, the property price and the land price increased about 12% during that time. And compared with the average price change in around Sydney is about 5%. So that's actually is a huge increase during that time in this specific area. Then in 2005 to 2007, the whole project is under construction. So then if we look at the price of the land and the property, we find that the price actually decreased about 5 to 7% during that time. Someone may argue that during that time, 2005 to 7, the property in Sydney actually decreased a little bit, about 0.7%. But talking about the specific area in the Macquarie Park and the Macquarie University, the property price decreased about 7%. That's a huge decrease because of the construction of the transport infrastructure. Then after 2008 and 2009, the government opened it to the public. We find the property price increased another about 8 to 10%. And if you remember, Stephen just showed the graph during that time in Sydney, 2008 to 9, the property just increased a very little bit, very about maybe 2 or 3%. So now actually, I think this kind of example give us some idea that what time is the best time you can buy the land for the developer and for the buyers to buy the property. You think about these three steps, only the first step and the third step give you the chance to get the property increase, or then the second part actually the property value will decrease. But we know that the property market is really hot in Sydney now, so this is kind of the previous experience.
Yeah, just touch with Andrew's introduction to transportation and infrastructure. I think when you're planning any location or you're doing feasibility on a location, you have to understand where the trends, where everyone's moving in terms of transportation. Also looking at what's the potential there, whether it's an infill development or a greenfield development, because everybody seems to be battling for units, looking into infields and stuff like that, where you're getting price out of the market, or council DA approval is a lot longer. So understanding where infrastructure and transportation is going will allow you to look at other places, perhaps will lower your cost of purchase. So then you can develop faster, or even in greenfield area where the council will be a lot more readily accepting of your DA proposal. So then they can fast track your development, therefore lowering your costs. So my area is I look at the northwest growth area, which has a really high growth rate at the moment. But then look at other areas such as the southwest where the second airport is. That second airport is going to be twice as big as the current airport. So there's huge potential there that maybe we're not looking at. And also look at the trend. Certain trends are, the first generation of investors in Australia concentrated on units. But now a lot of people are realizing with units, you have to pay strata. You don't really actually own the land. So a lot of people are now moving to land and house packages. And so I'm just educating the developers on the two different sides of things. And where are people, the trends are going, so you can better educate your developer, finding the location for them, and understanding how they want to grow their company. Because you can't be playing with 20, 30 different developers and building high-rises all the time. It just doesn't work, and you got to look at alternative and creative ways to do it. So that's where we come in, is that offering that kind of services, from understanding location, doing the feasibility, helping them through the DA process approval, because a lot of the time, you can pick a site, but if you don't know how the council work, the DA could take forever, and such like that. And a modification, we'll just blow it out, and that stuff like that.
So above ground structure, so those there's a smaller variation compared to underground risk. So for example, contamination. So my area my specialty is contamination. Now, according to the US EPA, there's a super fund. They had a based on US EPA, they say that the uncertainty in terms of contamination, dealing with contamination, can be up to 200% of your budget, especially at your initial stage. If you don't plan well, that can be big variation in terms of managing your contamination risk. We also recently have a developer, they approached us, a Chinese developer. So they had some issue they want us to help. So is to deal with, they have a development site in Walleye Creek. They have a big basement. They X-ray into clean material. They thought it's clean material. So, but they didn't realize there's acid sulfate soil in the clean material. Now, acid sulfate soil is a naturally occurring material. So even though they think it's clean, hey, how come we have to spend so much money sending to a landfill? They just don't understand. So, and in fact, there's extra millions of dollars that they have to deal with the cost. Now, I'm not talking about thousands of dollars, I'm talking about millions of dollars, just for a standard, say, a small apartment. So millions of dollars is a lot of money, a big variation.
Look at some of the feasibility studies, some of the assumptions in there doesn't really capture what really happens in construction and the sort of time frames. So most property developers, their biggest driver is the return on investment. So that looks at what is the initial capital cost, what does it cost for the overall total development cost, and in what sort of time frames do they capitalise on that return. And one of the most significant things I see in the feasibility study is you've got to look at land contamination. You've got to look at where the site is. What are the planning controls for that area? So with Sydney City Council, there's a two-stage DA process. So, and then also looking at the length of the DA process. So if you're buying a property and you're hoping, okay, in 18 months we're going to construct and sell off the plan, in actual fact, a lot of the areas to take all the contamination out and the construction and bad weather, it actually takes somewhere between 4 to 5 years. So really, there's a lot of construction blowout that if you don't get really good advice, that feasibility that's based on your decision to buy that property, very quickly, this 25% return, you're looking at somewhere probably closer to 15 to 18%. So 4 things, really look at what assumptions are in the feasibility study, what advice are you getting, where are you getting that advice? Because there's a combination of engineering, planning, urban planning, legals, there's a whole heap of other stuff from a control. If it's an industrial site and you're converting it to residential, so there's a lot of planning controls that come into play as well, and urban planning contributions. So good engineering advice and someone that really understands construction. I've seen some figures where I'm like, how can you do it for that price? It's almost impossible. And you also got to take into market considerations. So if there's like 50 projects in Sydney right now and you're all competing for the same builders, they get to raise, I've worked in construction for 15 years, the margin on construction is crazy. For this pen you might pay $2 for it, but in construction they will charge you $15 for it. because you're all competing for the same amount of steel, for copper, for services. So that's the other thing, having really good relationships with architects, builders, engineers, and putting really good tenders.